Hello, ladies and gentlemen. I'm Bryan Ellis, publisher of Accredited IQ Magazine, where we help accredited and affluent investors like you to identify, evaluate, and profit from elite investment opportunities. My friends, there is a huge opportunity before each and every one of us today. I believe it may be one of those once-in-a-lifetime types of situations, the sort of situation where when we come out on the other side of it, you'll find yourself saying, I wish I'd taken advantage of that. Kind of like buying into tech stocks in the early 90s and 2000s, or buying real estate immediately after the crash of '08, or buying gold in the early 2000s when it was barely higher than $200 an ounce. What I'll share with you today is of that magnitude, but just like each of those home run scenarios, this one is not totally obvious unless you take a very close look, and that's what we'll do today during the next 20 minutes or so. We meet today, ladies and gentlemen, during an incredibly precarious time for the U.S. and world economies. Just yesterday, here in the United States, we saw the Federal Reserve hike interest rates by 75 basis points. That is a huge hike, my friends. The biggest such hike since 1994, a whopping 28 years ago. Of course, they're doing that ostensibly because inflation is at a 40-plus year high. And they think that increasing interest rates will slow the terrifyingly rapid march of inflation. We all know that everything from food to gasoline and essentially every other consumer staple has increased rather dramatically in price since January 2021, and some essentials like baby formula have been totally unavailable in many places. And that's just the start. This chart from Bloomberg shows us some more awful reality. U.S. equities have cratered, with NASDAQ alone, that haven for the biggest of the big tech stocks. NASDAQ is down 15%, while U.S. Treasury yields, the real evidence of increasing interest rates, well, those yields have exploded higher. Here we see that the market had actually previously priced in that huge 75 basis point interest rate that we had, hike that we had just yesterday, but tellingly, it's also priced in another hike of the same amount for next month also. This means that smart money thinks we're going to get another such hike next month. That is astounding. So just think about it. Last time we got a 75 basis point hike in a single month, like the one we got yesterday, well, that was 1994. And things were so bad that an entire country, Mexico, had to be bailed out by the IMF. Now it looks like we're getting two of those massive rate hikes, at least, in a row. Mind-blowing. Now, all of that is useful and interesting, but it's kind of esoteric. What's not esoteric is the price we all pay for gasoline at the pump. Here we see national average gasoline prices over the last 10 years from GasBuddy.com. And one certainly need not be a mathematician to see that prices are higher now than ever before. And since so many of you watching right now reside in California, you know that your prices are higher than everyone else's. It's a tough situation. Now, we've got to look at some political information at this point, distasteful though it is. If you're a fan of Joe Biden, you might be tempted to dismiss what I have to say in the next few minutes, and I implore you sincerely, please don't. It turns out that there's an astounding way to create great protection and great profit for your portfolio simply by taking the Biden administration at its word. So do yourself a favor and stick with me here for a moment, as everything I'm about to share with you is how I'm making the case for a tremendous and very actionable opportunity for your portfolio, which you'll understand momentarily. So, our economy is in really bad shape, and the White House steadfastly claims powerlessness to address the ills of our economy. The oil situation is not their fault, they say. It's Vladimir Putin's fault. They're powerless, they say, because it's the fault of oil companies, what's going on in the world right now. Inflation isn't Biden's fault, so he says, because all of the power and fault rests in the Federal Reserve, and of course with Vladimir Putin also. Of course, the baby formula shortage isn't the fault of the White House either. In fact, all of it is the fault of literally anyone but himself. So why all of this focus on the Biden administration's claims of powerlessness? I'll express that to you in the form of a logical syllogism to make it clear. Premise number one, Oil prices are extremely high. Premise number 2, the most powerful economic entity in the world, the White House, claims no power to reverse or otherwise impact high oil prices. So the conclusion is this: oil prices will almost certainly remain very high and could go even higher. This points, my friends, to an astounding opportunity for prudent investors like you and me. Indeed, the Financial Times ran a story just yesterday pointing out that oil supply will struggle to keep pace with demand in 2023. Then there's Oxford University, you know that Oxford, the top university in the entire world. They seem to concur, as a report recently issued by Oxford's Institute for Energy Studies proclaims rather ominously that the date at which oil demand will stop growing is highly uncertain. More importantly, there's little reason to believe that once it does peak, that oil demand will fall sharply. Hey, in plain English, what they're saying is this: there's no reason to think that the demand for oil will continue to do anything but grow. And if it ever does stop growing, it will likely remain very high forever. There's simply no reason to expect anything other than continuing and very long-term oil demand. And what makes it even crazier, my friends, is that even the Biden administration's own EIA, the U.S. Energy Information Agency, admits the very same thing in the latest International Energy Outlook report they published last year. Now that report, which is published every other year, includes projections all the way to 2050. And the primary takeaway from that report is this quote: by 2050, global energy use increases nearly 50% compared with 2020. So the boom is on, and the demand for oil is going nowhere but up, 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 according to everyone, including the White House, who claims powerlessness to impact that incredible ascent. So why does this matter to me and you as seekers of extraordinary alternative investments? Because this translates into obvious and extraordinary opportunity, and the evidence is overwhelming. I mean, consider that even though the S&P 500 has been absolutely slaughtered this year, there's one sector that has not only held its own but has boomed upwards, and that's the energy sector. Just look at this graph of the S&P 500 energy sector for 2022 year to date. Remember that despite a tiny bit of cooling in that sector in recent days, that sector is up by 47% this year alone, during a time when the broader S&P 500 has gone exactly the opposite way, falling by a whopping 20.4% year to date. Now, to be clear, you'd have done well, very, very well, if you'd invested in energy stocks in general and oil stocks in particular earlier this year. And I suspect that run isn't over, and it may well be worth a conversation with your broker to determine whether to allocate a bit of capital to oil and energy stocks. But that is not what I'm recommending to you here today. I'm also not recommending that you begin to trade oil futures, even though there's likely a lot of money to be made there too. That's because futures trading is a very specific skill requiring very active involvement, and that's just not a good match for most people, myself included. But there's a way that makes great sense to be involved in oil and to do it right now, and that is through direct ownership of oil-producing wells. Since most of you have never invested in oil wells before, I'll give you a quick example project to whet your appetite and to show you how risk can effectively be avoided. So this project is called the ASOF 8. It was offered to the public about a year ago, and it sold out in one day, even though the buy-in was $200,000 per investor. The idea of this project was simple. Investors would receive ownership in 8 small oil wells. Each of these 8 wells was already producing oil, such that investors would immediately begin to receive about $2,000 a month of income. But that was just the start, because all 8 of those oil wells were producing at suboptimal levels due simply to neglect of those wells from the prior owners. So when the necessary minor maintenance was completed, it was projected that the income would increase rather dramatically and investors would enjoy that increase. And that's exactly what happened. When those repairs were made very promptly, monthly income rose substantially. In fact, the last normal distribution received by investors in that project was about $6,500 for the month of April of this year. At that rate, that's $78,000 per year of income from a $200,000 investment. And that's real. That's what's happening right now. And frankly, there's every reason to think that that income from that project will continue for somewhere in the range of 15 to 45 years, because many other wells in that field have produced for that long. It's a pretty good deal, right? Yeah, definitely. And there are others like it you could get into today. As I said, I'm not going to mention any of them to you specifically in this presentation because we're here for education, but there are some great ones available right now. And you're welcome to set an appointment with me, and I'll make some connections for you privately if you're interested in knowing more about those. You can see a link to set an appointment with me there on your screen if you'd like to do that. But that's not the end of the story. Because you see, people who invested 200 grand in that project also get to take a tax deduction for that entire amount of $200,000. Yeah, that's right. A $200,000 tax write-off for you people in New York or California could easily be worth 70 to 100 grand in saved taxes alone. So that's like slashing your investment almost in half just from the tax benefits, setting aside the extraordinary income. There are actually even more tax benefits and even more income potentials for this project than I've shared with you so far. But the point is, this is a real thing, perfect for a time such as this. And it gets even better because those same units that are now producing something on the order of $6,500 a month, well, imagine if it was possible to make that investment now. Well, you could do that. You'll pay more than 200 grand like the original investors for sure, but your yields will be simply extraordinary. And the risk profile will be incredibly favorable too, since the units are already paying out. The biggest risk is already eliminated. And here's where we get back to the powerlessness of the Biden administration, what they claim over and over again. In a huge and a very important way, I actually agree with that, though not in the way that they mean. You see, back in January 2021, within days of taking office, Joe Biden instantly announced that he was terminating the Keystone XL pipeline and that he was rolling back some oil-friendly regulations that existed at that time. Both of these moves were clearly designed to cut the supply of oil and gas to the United States. And yes, we're looking at politics again, but for economic reasons. So let's try to remove our partisan glasses for just a moment. So regardless of the intended consequences, what Biden actually accomplished was to push oil prices consistently and substantially higher. As you can see, this is when Biden took office, and this is what's happened since then. And we know with great confidence that he's not going to roll back the changes he made. How do we know that? Well, we know that because this is a congressional election year, and a huge part of the president's job is to do things he believes will make it easier for people of his party to be elected in November. And clearly, based on what he's been doing in the past few days, Biden thinks that a PR campaign against oil companies will win him some favor. But what he's not doing is sending proposed legislation to Congress. What Congress is not doing is writing laws to punish oil companies and pushing for their passage. Why? Because everybody knows, whether you like it or not, if you punish oil companies, all you do is make oil more expensive. There's simply no debating that point. And besides, congressional Republicans were more than powerful enough to stop Biden's signature Build Back Better initiative from passing Congress. And they will certainly stop any attacks on the oil companies as well. The only way to drive down oil prices is to increase supply, to have more oil. And Joe Biden is powerless because the more extreme side of his support base will never ever stand for that. So Biden is in fact powerless. Powerless, that is, to do anything that will actually place downward pressure on the price of oil. And that means for prudent investors like you and me that there's very strong opportunity right in front of us. Opportunities that are so fundamental in nature that a middle school economics student could understand it clearly. But I want to tell you what you should not do where oil investing is concerned. Because the truth is that there can be a lot of risk in investing in oil production. What you should not do is invest in an oil well where there's not a tremendous amount of scientific and historical data to suggest that there's a lot of oil in that location. What you should not do is to invest in oil wells where the team doing the work is anything other than highly experienced and very strong. What you should not do is to invest in oil wells blindly, thinking that there's only upside. That's not true. There is risk for sure. Any oil well drilled could be dry. But there are great common sense ways to really mitigate that risk. Here are a few examples of those risk mitigation techniques. You should write these down. First, rather than investing in virgin or wildcat oil drilling projects where a new well is being drilled in an unproven location, consider focusing instead on projects that are called recompletions. This is like ASOF 8, where you're investing in a place where a well has already been drilled in the past, and for some reason production is suboptimal but can be corrected. The risk profile of these kinds of projects is really favorable, and the built-in tax advantages slash risk even further in a guaranteed and totally predictable way. I know of one such project right now, it's available right now, that fits that description. I'm telling you, I'll tell you a little bit about it from memory, so some of the details might be slightly off, but in this particular recompletion project that I'm thinking of, a very experienced oil man drilled a well in this location back in the 90s, and the well immediately began producing oil. But it's happened sometimes. A common but debilitating structural problem for his well materialized, and so the well stopped producing. It just, the well broke essentially, so it wasn't, even though there was lots of oil there, none of it was coming out anymore. Now, he could have easily re-drilled that well and repaired it right then and continued pumping, but he chose not to do that for a very good reason, because this was in the 90s and oil was very, very, very cheap at the time. And so he decided to leave the oil in the ground so it could be extracted later when prices got higher. And guess what? Prices are way, way, way higher right now. And that's exactly the location where this new project is about to be drilled. It's an exciting one. The income projections for that project actually exceed those of ASOF 8 by a rather substantial margin. That's pretty extraordinary. So that's the kind of project I suggest that you seriously consider, because again, fundamentals are totally in place there and are absolutely undeniable. And what I love about oil is that even if oil prices got slashed in half, which I can't foresee that happening for a long time, if ever, but if that happened, it would still be wildly profitable to own productive oil wells. Now, one more risk reduction tip for you. When possible, invest in projects where there are multiple oil wells involved in a single investment. That way, if any one of the wells failed for some reason, you can still be profitable based on the production of the remaining wells. It's just good diversification. Now, there's one project I know of that's still on the drawing board for now, but it's coming up soon, and it offers that exact thing. It's actually in the very same field as the ASOF 8 field I mentioned a while ago. Just to give you an idea, in this new proposed project, in one project, 3 new wells will be drilled at the ASOF oil field, a field that has been producing prolifically for nearly 100 years with no end in sight. Furthermore, the location of those 3 wells they were selected by a geologist who has picked 20 different sites for oil wells in that field during the past 2 decades. And of those 20 selections, 19 of them ended up being very productive wells. So extraordinary record. Nothing is guaranteed, of course, but the financials of this particular project that is on the drawing board, the financials are such that it seems quite plausible that investors could get all their money back and then some in the first year alone, and then everything after that is gravy forever. And that's what I'm talking about. That's an opportunity that can't be ignored. Look, oil investments can be risky. So can stocks like former high flyer Netflix, which has dropped about 70% year to date, or Tesla, which has dropped 41% year to date. Even Amazon has been trashed by 37%, and Google has been the so-called strong stock of the bunch, because it's only been slashed by 24% or so. So risk is everywhere. What I'm encouraging you to carefully consider is how to participate in an asset class that may be new to you. Direct investment in oil production. But it's an asset class for which the fundamentals are incredibly and undeniably strong. Are the fundamentals for the stock market strong? No. You know it. Stocks depend on the broader economy, and the broader economy is incredibly weak, and we all know it, though I fear that few of us are aware just how weak it already is. So, my friends, we're in the home stretch now, just about done here, as I've made the case to you for 3 points. Number 1, the Biden administration is claiming powerlessness to impact the price of oil. Number 2, the presence of Biden's PR campaign against oil companies, but the complete lack of legislation to back that up suggests that absolutely nothing will really be done to push oil prices down. And number 3, Direct investment in oil production can be done prudently, predictably, and very profitably, and is thus worthy of consideration for wise, conservative investors in a time just such as this. So my primary hope for you today is that you'll very seriously consider the value of participating in direct oil investments. Yes, you've got to be really careful with whom you work in that industry, no doubt about it. And to that end, if you're interested in learning more about oil investment opportunities, set an appointment with me to have a quick chat, and I'll be happy to tell you more after I get to know you a bit. I'm not an oil company. I don't have anything for sale, but I'd be happy to point you to those that I do know of. And this is a particularly good time for that, actually, as there's one good opportunity I know of right now and one more very, very attractive one I described to you that's coming up soon. And since good opportunities, my friends, are in short supply, it's a great time to see if any of them fit you right now. So, my friends, it's been a pleasure chatting with you today, and I hope that those of you who are fans of the Biden administration will give me some grace, as I've had to focus on areas unkind to Mr. Biden. But I trust that you see that the analysis was economic and certainly not personal. My friends, it's been a great pleasure to speak with you today. If you benefited from this presentation, please let me know using the comments area in your webinar screen. I always appreciate that. Similarly, if you have questions or other comments, please enter them in the comments area right now, and I will send your answers via email. So no matter what, my friends, invest wisely today, and you can live well forever. I'm Bryan Ellis, publisher of Accredited IQ Magazine. Have a great day, everyone.